You alright, guys?
Economics, finance, politics. This is
Just give us 2 seconds.
Now, Beijing will allow some virus-infected people to isolate at home. Significant shift, a significant shift that reflects the pressure that officials are under from a record outbreak and growing signs of public opposition to COVID-0. Now, for more on the shift, let's bring in Bloomberg's Rebecca Chun-Wilkins, our Asia government reporter in Hong Kong. Good morning, Rebecca. So, how is the tone actually shifting in China?
Well, this is certainly the biggest change that we've seen from authorities so far. We've seen them sort of downplaying the virus and China's top COVID czar saying that we're moving into a different phase, a new phase of COVID control as well. Two sort of big significant things. One is this focus on getting the vaccine delivered to China's elderly population. This is seen to be crucial if there's going to be full reopening. And the second is that Beijing will also start allowing low-risk COVID-infected patients to actually isolate at home. And that's something that Hong Kong also moved to do in the early stages of it when it was opening up.
So, Rebecca, how are things looking since the weekend's protests? Has the civil unrest actually calmed down?
Well, it's been relatively muted. I mean, we really saw sort of the apex of that disruption coming through the weekend, and in part that's because of the very heavy police presence that's been rolled out through many major cities in China, Beijing, Shanghai, and so on. We are also, though, keeping an eye on the fallout from leader Jiang Zemin's death. Mourning in China historically is a period for people to legitimately come out on the street and gather publicly. So this may provide sort of some kind of opportunity to sort of rally protesters together. And we are seeing on social media as well some nostalgia for the period that Jiang oversaw, a period of great openness on prosperity, which is somewhat of a contrast, of course, what people are facing now under 3 years of very strict COVID control measures under Xi Jinping.
Thank you so much. Bloomberg's Rebecca Chun-Wilkins there on the very latest out of China.
Okay,
now let's get straight to the Bloomberg news. Here's Leanne Garrett. Hi, Leanne.
Right, so building up off
in South Africa,
yesterday's
a Parliament
update.
approved panel has found there are grounds to
yesterday.
investigate President Cyril Ramaphosa in connection
as
with
you
a
can see
scandal
from the
over a
screen,
robbery at his game farm.
just missed take profit
Ramaphosa's job
2 on
could
Bitcoin.
ultimately be at risk over the alleged cover-up, with lawmakers
Just missed
scheduled
take
to
profit
debate
2.
the report's findings next week. The president has
The
reiterated
Litecoin
his denial
and
of any
Matic trade
wrongdoing.
were
Now,
closed.
President Zelensky says
We
6 million
moved
people are
our
currently
stop
without
losses to
electricity
break
in
even.
Ukraine after Russia's attacks on the country's energy infrastructure.
Well,
The
as
Ukrainian
Jerome Powell's
president says
speech
he
was
needs high
live,
voltage equipment that can be
we got a
repaired
very sharp
quickly, transformers
decline,
as well as generators
which
to get
basically brought
through
us
the
out
winter.
at break even on both
NATO's
of those
Secretary
trades.
General
Now,
says the
for
alliance
those
must
that
avoid
obviously
repeating
didn't
mistakes
move
it
their
made
stop
in
loss
relations with Russia
and
and
kept it
ensure it limits
where
dependence on China. Jens
they were
Stoltenberg
originally.
stressed that nations cannot
So in
make
terms of
decisions
Matic
solely
went
on
and hit both
commercial
of the take profits.
considerations. He spoke
So
to
hopefully
Bloomberg
cashed in
after
on some
foreign
nice profit
ministers
there.
met to discuss issues including Russia's.
Sorry, Pedro, I've taken the news off. So, yeah, the Matic trade hit both of the take profits. Litecoin trade hit one of them. So hopefully cashed in a little bit of profit on that one. But yeah, Bitcoin trade just missed take profit 2. But on the Tuesday's live stream, obviously we hit all 3 take profits. So hopefully cashing in on some nice profits this week. Yeah, it's going quite well. In terms of the TA for today, right? And what we're expecting. So yesterday we had a full day of news. So job market, well, the US labor market is still looking tight. We got a decline in job openings report. But it wasn't significant, so we're still looking tight. Now, Jerome Powell does touch on this in his speech yesterday. He does talk about the demand for jobs, the supply of jobs outstretching the demand for jobs. Okay, so there's a gap there. And for a number of reasons, again, he does touch on all of these reasons, mainly due to the pandemic, now apparently there's about 3.5 million new. What did he say? So he said 3.5 million people more in unemployment compared to previous levels of the pandemic. 2.5 million are new retirees. Okay, and he does discuss the reasons for that. Now, obviously, there's a gap there. Okay, that needs to be filled. He does say that it's unlikely to be filled until next year. So see how things kind of hold up. But again, obviously, companies need these jobs, and because they're not getting it, what will naturally happen is wages will push up higher, so that people are more interested and more inclined to take these jobs for a higher wage. And obviously, higher wages is going to be linked to higher inflation or inflationary pressures on the economy. So that's going to cause a bit of a problem. And Jerome Powell does discuss this and state that because of this, it's likely that interest rates are going to have to be kept high for longer moving into next year. Now, he does also touch on, obviously, the recent data that we got in terms of lower CPI in the month of November, that there is signs of a slowdown, especially in the figure that we got yesterday with the Chicago PMI. Now, it's below 40, and which indicates, okay, from history, a reading below 40 is followed by a recession, okay? So you don't normally get a Chicago PMI below 40 unless, obviously, a recession's on the horizon. So quite a lot of useful information in that speech. So I would recommend going and touching base on that. We did send it out into the channel. So go and check that out. You can find it on YouTube, CNBC. So yeah, go and listen to that. Now, in terms of data that we're getting today, there isn't a great deal. There's some ISM figures. Sorry, not ISM. There's some PCE figures. Initial jobless claims, which is the important one for today. But tomorrow's your big day in terms of labor market data, which is the non-farm payrolls data. So we want to keep a close eye on that. Okay. Apart from that, next week is a very clear week in terms of data. And then the following week on the 13th, we get US CPI, which is the big report. And then obviously we get the interest rate decision followed, I think the following week. Okay. And then obviously it's Christmas, New Year's. And normally you do get obviously profit taking and all of that good stuff happening. So a lot of volatility this month to be expected. So there's going to be a decent amount of large moves happening. Okay. Now, in terms of TA for Bitcoin, obviously it made a push up here twice. We've got a fib from low to high. We're expecting somewhat of a pullback. At the moment, as you can see, we are currently holding. So it could be that we just go from here to this level of resistance. We've got two order blocks here acting as strong resistance. There's a lot of liquidity at the top here. So we could see a push up here, holding, and then a move back down. This is where we're expecting prices to really start to stall. So hence why we got take profit 2 and take profit 3 there. Decline in buy side volume. Okay. As well as obviously we're getting a small pullback and it's declining volume. So normally it's followed by a push up higher if the sellers don't start to pick up some momentum as they move down. So you've got to keep a close eye on this. Obviously we're waiting for that initial jobless claim report to come out. That's the big one for today. Okay. What else have we got here for you? Bear with me. Okay. Oh, dollar. Yeah, there's something to really bear in mind. If that's the case, then we're probably going to see a little bit more of a sustained bear market rally in risk-on assets. So something to keep in mind of. Hopefully we can hold this. If we can hold this and start moving back up, keep an eye on the lower time frames for this to happen. But as you can see, we're extremely weak. We've rejected that 100 moving average on the 4 hour, and we are making a move down. So yeah, we'll have to keep a close eye on that. Now, Ethereum, not much room left for it to make a move up here. Okay, we've got the 200 moving average on the 4 hour and a nice liquidity zone at the same level. We also do have, obviously, this is the top of the range, or essentially the range that it's currently building up on. So something to bear in mind. So there's going to be a decent amount of resistance at that level. As you can see, we've got this range being built up here. We can move this over the way over here. So we'll see how things kind of react, but we are expecting obviously prices to start to weaken at that level. Now, if we start to breach these levels, then again, we're looking at a bit more of a sustained bear market rally here and prices to actually rise. Now, Bitcoin dominance is at an all-time low as well. So whenever Bitcoin makes these breaks, you will see the altcoin market really start to pump up as they are at near all-time levels as well. So there's more room for prices to push up than prices to push down. So yeah, something to really keep in mind as we move towards the next set of US data to come out. But yeah, in terms of where we're expecting things to go from here, hopefully we can come down somewhere around this region, test this level, and then make the next move up. Let's get what will be interesting to see is a trend-based fib on here. So if we go from low to high, and roughly, let's say it comes down and tests the 0.5. As you can see here, we've got the 618 just in between take profit 2 and 3, and then the 786 lining up perfectly with that take profit 3. And then we've got the 1 fib literally lining up perfectly with the top of that order block. So those are some levels to really keep in mind. The 1618 is all the way at 17.9. There is a bit of resistance at that level. So yeah, could see a nice test of this level. It's looking likely from obviously those fib projections there. So yeah, we'll see how things kind of play out here. The one that we're looking at in terms of potential entry, we did send out a market update on our TradingView account, so go and check that out. We do market updates every single day of the week. So you will always have a Bitcoin and Ethereum update every single day. And then we also send 4 other altcoins and updates and TAs every day. So feel free to give us a follow. You won't be disappointed. In terms of the trade that we were looking at was Dash. Let me just get it up. Setting up some nice structure, seeing a little bit of a pullback here. So we do want to see a relatively brief pullback. Nice wick on the bottom, giving us a nice entry, and then pushing up again for its next leg up. So hopefully we can catch some nice trades here today. The last couple of days have been good, but also kind of not. Volatility has picked up, so kind of making it a little bit difficult to hold on to trades and see some decent moves. They are kind of really being brief moves in the market. They're not being really sustained. So yeah, we'll have to see kind of what happens today. But we are expecting obviously another push back up, another attempt to kind of break through these levels. But yeah, anyone that's here, welcome to the stream. We are on Twitch, we are on YouTube and TradingView, so welcome. Feel free to touch base with us in the comment section. Any TA that you wish us to go through, we're more than happy to do that for you. Doesn't necessarily need to be crypto related, can be any market. We're more than happy to go and touch base on that. And yeah, any questions, anything that you want to ask us, just type into the comment section. We've got it all up here, so we'll see you. But yeah. So we're just going to chuck a little bit of news on, just touch base on what's happening this morning and the outlook.
On the program this week, one of the best or most pressing issues in personal finance. We look at the sustained pressure that inflation is placing on the UK and housing, UK housing and mortgage sector. Plus, trying to get a big bang out of Brexit, our finance team tells us how the city is reacting to reports that the UK will relax banking regulation. But first, we start our investigation into how the UK has become home to one of the world's biggest gambling industries. That's today's Bloomberg Big Take. And for more, we're joined by Gavin Finch from the investigations team, who spent months trying to figure out, of course, this industry, what it brought. And Gavin, first of all, congratulations to you and your team. It's a brilliant read. We also pushed it out on social media. It's a well-researched, thoughtful piece. Why is the UK so liberal on gambling?
So I think it can all be traced back to the Gambling Act of 2005. This allowed firms to advertise sports betting, casinos, and poker on TV and radio kind of for the first time. And somewhat unbelievably, until 2014, gambling companies based offshore could even sell to British customers without a UK license. But crucially, the law predated the arrival of the smartphone. And betting firms have been
let's go on the lower time frame and see what's happening on the lower time frame. Hopefully we can get some more support on CBC. Does look like a relatively slow morning, waiting for dollar index to kind of structure.
But Gavin, what are we looking at? Is this an addiction, and does it show the direction of travel that other countries could take when it comes to people, losing a lot of money by gambling online?
Yeah, I think it does. What has happened in the UK in the last decade, surging rates of gambling addiction, hundreds of suicides every year. Estimates put it at more than one suicide a day due to gambling-related
very, very slow price action.
It's an object lesson in the dangers confronting the US.
We're going to try and see if we can scout out any other potential
most US states have now liberalized their gambling laws in the last couple of years to allow online gaming. And all the big gambling companies are now queuing up around the block to try and
if we can hold this level for a little bit longer. We've got that 100-moving average on 15.
In the US.
Probably looking likely to come and tap that.
Why have, first of all, online casino games become so popular in the UK?
Let's see.
It all comes back to the smartphone. The iPhone really did change everything. Suddenly people had a portable device with a large screen, internet connection, a lot of processing power, and that was just perfect for these online casino games. Gambling companies have spent a lot of time and a lot of money designing these games to be highly attractive, and the smartphone was the sort of perfect delivery device for them. You no longer need to walk into some forbidding-looking gambling store off the high street to place a bet. You can do it anytime you like. You can do it on your commute, on the sofa, in bed. Everyone now has a virtual casino in their pocket.
And so this is why it's probably a lot more dangerous than other gambling products, right? These online casino games. What are we doing about regulation? There's also software, you put your, email address and saying, I don't want to gamble anymore. And it stops, most gambling sites on your phone.
Yeah, so that's GamStop, and that has been a game changer for many gamblers, but it's reliant on the individual, the addict, to kind of isolate themselves, which is a pretty flawed approach anyway, because
bear with us. We are just trying to see whether we can find some other trades.
It's easy to get around. There are hundreds of websites out there kind of giving tips on how people can get around that ban once they have.
See if we can get some nice alts in the pipeline ready. for the market's next move.
Who did get around it. He was only doing it for sort of research purposes, but he
by the way, guys, if you guys got any
to get around. So
any scouts,
kind of
type into the
protection, I guess, has been outsourced to the
chat.
individual, to the gambler.
Let's work together.
Gavin, thank you so much. Gavin Finch there, of course, with some great reporting.
Decent profit in today.
And if you'd like to read
Last 2
Gavin's
days have
piece, just
been
type NI Big Data
relatively
Bloomberg
good.
Terminal. You'll find it on Bloomberg.com. I also mention it in my social feed. Now, the UK's Financial Conduct Authority has undertaken research into online gaming and has highlighted harmful design practices to manipulate consumers in new ways more easily than ever before. That's something that the regulator says encourages excessive risk-taking or risk appetite and gambling-like behavior. So we're now joined by Therese Chambers, Director of Consumer Investments at the FCA. So, Therese, thank you so much for joining us on this very important topic. When you review certain platforms and look at gambling type obsessions, what have you learned and what's the next step? I don't know whether you can regulate them or what can happen to protect consumers.
Yeah, absolutely. So we identified a really significant increase in activity on trading apps that we decided to look into. And the research that we have recently published shows that there has effectively been the use of gamification techniques that are designed to draw investors in, to encourage them to increase the volume of their trading, and also to encourage them to increase the level of risk that they take as they're trading on the apps. And this is very concerning. It's very indicative of problem gambling type behavior. And we conducted in-depth research with over 3,000 consumers who have experience of using these apps. And many of them actually described their interaction with the apps as being like gambling. They described
we're holding on
to
level quite nice, yeah. So have a little look at that.
So can you tell us a little bit more about some of the tricks you used? I guess some of the apps promoting gambling risk appetite and what you can do to respond or regulate that.
Yes, of course. So we see lots of positive reinforcement techniques. So when someone makes a trade, they get a big congratulations message. There's a shower of confetti on their phone screen. People get points and badges. There are leaderboards.
It's above the moving averages.
The higher up the leaderboard that you go, there are push notifications that give you really up-to-date
volume to start picking up. Obviously, we had a level
market changes, price changes, to really build
relatively
that
low
fear of
volume,
missing
so we should start seeing volume pick up. Saying some nice structure, so if it continues, that volume should start to come in as it attempts to break through these levels.
So following up with the trading firms. They are regulated by us, these 4 trading firms. We're following up with them, and we are reminding them of their obligations under the new rules that we're introducing later this year, the Consumer Duty, which is all about protecting retail investors and all about requiring firms to act to deliver good outcomes for retail customers. And that's the discussion that we're having with those firms.
And have these firms engaged with you? Are they ready to change or make things a little bit easier, or do you see it as we have to go harder on them once the rules come into place?
Yeah, we're in dialogue with the firms.
Okay. Therese, more broadly, how is the behavior of retail investors actually changing in this economic downturn? Are people taking more risk?
Yes, so I think it's a feature of economic downturns more generally that what we tend to see is that frauds and scams go up.
Jerome Powell's speech yesterday was very, very interesting. And it is pushing towards that narrative of a Fed pivot relatively soon. He does obviously say that interest rates are going to be held up at higher levels for longer,
Therese, can you give us
and may potentially go higher than expected.
Crypto, and I know you don't regulate crypto, but how is consumer behavior
I think
changing?
the main point that the markets are wanting to see is less 75 basis point increases. Okay, and we might actually have the first one come in December.
And what we have seen
which is going to
uptake in consumer
see a nice push back up in prices
through those platforms.
So
consumers should
we're kind of on a time clock here. if we don't start to really look bearish and start to make moves to the downside, we are probably going to see
Therese Chambers, thank you so much for
larger than expected moves to the upside. Yeah.
Now coming up, we're next for UK house prices.
Normally around Christmas time, New Year's time, you do see a rally up in prices. So, I mean, history does tend to repeat itself, but not always. But it's something to keep in mind as we move towards.
Brands like Samsung.
So that's a decent level to look at. There is a decent amount of support. Yeah, nice order block. So yeah, it could be the case that we very, very quickly breach this 12 to 10k area, hit that 618 and then just spike up. But just bear in mind, when prices come down to this level here, they won't be tweeting around and holding structure here. It's going to be a very, very big reaction in the market, and we're going to push straight back up, potentially see a rally back up in prices, and then a turnaround coming back down, testing support and holding new support levels. And then recycling for that bull run. Now, obviously, the Bitcoin halving is normally when the bottom is set in and things start to push back up, and the beginning of the bull run. Obviously, that comes in 2024. Which is still a while away. We've still got 2023 to get out. There is going to be some very nice and prolonged rallies either way. But again, it's going to be very much data driven. 2023 will be very much data driven. Markets will be looking at when the rest of the world is basically coming out of recession. Okay. 2023, everything's going to be looking bleak, and there's going to be a lot of buying up. Everything's going to be extremely cheap to buy, and then it's to look at when is inflation really starting to come down, when are we seeing that big pivot in those inflation figures coming back down. Interest rates are starting to come down as well. Those are the kind of objectives, the economic objectives that we want to see starting to pivot. That's going to be our indication that the dollar's value is going to start to really come down, and economies are now entering the recovery stage of the cycle, and risk assets are back on.
Are prices likely to drop?
The Office for Budget Responsibility has forecast a 9% drop over the next 2 years.
Confidence
but there are a number of
comes
factors
back
that
into
could
the market in
against
terms
that.
of risk
So we've got
on,
a very
and they're taking the money out
banking
of
sector in the UK.
being held
The
in
poorest
cash,
third of
and they're starting to
households
reinvest
actually
it
only
into
hold
those
about
risk-on
5%
assets,
of
willing to
mortgage
take
debt.
on extra
You've
risk.
also got many more people on fixed rate
in hope
mortgages now
of
than in
greater
2008.
profit.
And you can always hope that we don't get a big job shakeout during this recession. But I've been looking back, Francine, at history, and they've picked out the 4 biggest house price falls over the past century. And what you can see from the 1950s experiences, you don't necessarily need a big spike in unemployment as a prerequisite for a house price fall. But what we can also learn from history is that on average it takes about 8 years for house prices to correct themselves. So reality is they fall fast and they rise slowly.
All right, Lizzie, thank you so much. Lizzie Burden, there was some great analysis and also a bit of a history lesson. Always go back in history to see what happened in previous crises. Now, for a broader look at the UK mortgage market within the European context, we're also joined by John Stepek. He writes for Bloomberg UK's daily investment newsletter, Money Distilled, former executive editor of the UK biggest investment magazine, weekly magazine, Money Week, also author of The Skeptical Investor, Guide to Contrarian Investing. I feel like I'm a skeptical house price commentator. First of all, John,
go back onto the lower time frame and see what's up there.
But it's also just you don't know what the economy looks ahead or looks like in the next 12 months. You also see an opportunity maybe for foreign buyers to come in because pound is so weak. So what are you expecting in terms of mortgages and house prices?
I mean, honestly, in the UK, I think house prices are going to fall. I actually think Lizzie made a really interesting and good comment there, which was that most asset prices have already adjusted to higher interest rates. Houses just don't do that as quickly. And the other thing that's interesting is the rate at which they do so is definitely linked to how fast interest rate changes flow through to the mortgage market. And in the UK, although the mortgage market, we do have more fixed rates, in terms of the kind of global context, our mortgage market is actually quite short term.
Still looking massively bearish.
For example, a 10-year fix in Britain will have people looking at you as if you're, slightly mad.
You're mad because here we do 30 years.
Yeah, exactly. Right? Well, no, a 10-year fix here.
Quite like
a very long time. Whereas, for example, that's that would be a short term in France.
We're all cursing, saying, "I wish I had a 10-year fix."
Yeah, no,
right?
I do now. I don't want to talk about my own exploits in the housing market, but I have fixed for long periods of time when rates were falling in the past, and that makes you feel like an idiot. But the
I'm brilliant at buying places. Always
even to be extremely pessimistic.
It's a great investment. I should read your newsletter more. Overall, so how does it compare? First of all, with European.
If we are able to break through this high.
I remember the NatWest chairman coming on and saying, crunch time is actually mid-2023, where a lot of these fixed income mortgages fall off.
Yeah, I mean that's the good point, because the 2-year fix, that one of the problems when we're talking about fixed rate mortgages, so a lot of people have taken out 2-year fixes. Yeah. So again, obviously they're quite short term. They kind of will be up middle of next year. It depends on what interest rates are doing at that point, but almost certainly, in fact, no, definitely, anyone coming off a mortgage at that point is going to be paying more. Oh. The question then is whether they can afford it. But in terms of actual house prices, the damage is already done, because regardless of whether employment stays high or not, the amount that people can borrow is going to drop, and that means that's the amount that people can pay for a house is going to fall. So, I don't think there's any question of house prices fall. The question is actually how bad does it get, and that depends much more on the actual economy.
So how bad does it get?
We're not talking decent amount. So New York Open's going to start releasing some data. So the first one that we're looking at is core PCE. Actually, to be fair, all of it comes out at the same time. So we're going to get core CPE, core PCE, initial jobless claims. That's the big one. And we also get some later on
because it hadn't had a recession
ISM
for so
figures.
long, house prices just kept on going up. And again, they've got a similar mortgage market to ours. So a small rise in interest rates has already seen, I think prices in Sydney are off about 10% year on year. And here in Europe, in Sweden, for example, and actually Denmark as well. Denmark had the world's first negative interest rate mortgage in 2019, which shows you that was nuts. I mean, I wish I could have got that. And so, interest rates were so low, and it doesn't take a very small rise for them to then have a massive impact on house prices.
John, you'll probably remember this, 15 years ago, there was a fashion of borrowing in Japan for zero interest rates. I mean, it's never good, because then you're very dependent also on currency swings.
Oh yeah, right? I mean, Poland's having that problem just now. The government had to step in and sort of, offer a lot of help to mortgage owners, because there's a lot of people had borrowed in foreign currencies.
Yeah. So invest in your currency is maybe wise, John.
Don't have your mortgage in a foreign currency. That's not a good idea.
John, thank you so much. John Stepek there from Lenny Distill. Now, coming up, Bloomberg understands that the UK government
will look at what's happening on dollar
index. The ring fencing of banks as part of efforts to get a big bang out of Brexit. More on that story next, and this is Bloomberg.
This is dangerous, though. Dollar index is literally our breaking point. If it really does start to bring it come down, it's hard to see it really push up now. A catalyst that will make the dollar's value push up higher is whether China reopens. That's the big one that's circulating at the moment, and we'll have to keep a very close eye on because it's going to put pressure on energy prices, on food prices. If that's the case, if China does open up. Obviously the West is in the winter season now, so they're using more energy. And obviously if we get China reopening, energy prices, so the energy consumption is going to go up. energy prices are naturally going to go up, which is going to put inflationary pressures on the economy. So then you starting to see a bit of easing, a bit of a better outlook now, and then it's just going to put the problem back to where it was, if not into a worse place than it was previously. So we'll definitely look at inflation starting to spike back up, the dollar's value starting to spike back up, and then again it's going to sustain that interest rate hiking cycle for longer, moving into 2023. So, and I mean, China's going to have to reopen at some point, and it's going to happen. So again, 2023 is going to be a very interesting year, and a lot of volatility. Yeah, we're just continuing to see if we can scout out any potential moves. Hopefully we can get something out of today. Okay, we've got one. But let's get it up on here. Alright, so
Economics, finance, politics. This is Bloomberg UK. I'm Francine Lapway here in London. Now, Bloomberg understands that the UK government will relax the ring fencing of banks as part of efforts to deregulate the City of London and get a big bang out of Brexit. This was first reported by the FT. Joining us now is Bloomberg's Tom Metcalf, who covers all things finance in the City of London.
So the one that we're looking at is Zcash,
We've been talking about bonuses,
ticker
ZEC.
ZEC.
So first of all, does ring fencing even make sense in 2020?
It's looking like we could potentially see a break.
On the back of the financial crisis.
Yeah, look, first of all, I should apologise.
On the lower time frame, it's picking up some momentum.
It's very one of these arcane things that have come out of actually
but,
the financial crisis.
On the 4 hour, it's just sitting beneath the 200 moving average.
And like you say, it's kind of been implemented already. So what the government is looking at is, can we
really want to see some volume
maybe
coming
easier
in
for
on
some banks? What they're finding is actually the banks have spent hundreds of millions on this, the Barclays, the HSBCs. They are pretty happy with it as it stands. They kind of almost view it as sort of, they paid for it and it's kind of an advantage for them in terms of competition. So what they're really looking to do is kind of tinker around the edges.
So I'll show you what we're talking about. It's just sitting just, see, so we could see a potential break. If we get that break, we will be moving up very, very nicely. But we'll see how things kind of hold up, just because.
Well, and I was listening to your podcast yesterday. And
ideally, we want it to be a little bit lower to give us a little bit more room to the upside. But
what they're finding is, as they look at the regulations, it turns out the City of London is largely pretty happy with what they've got and aren't looking for these kind of, this fire big regulations. So really what we're seeing under the Sunak administration is basically little tinkering on the margins and just trying to get those advantages where they can. But often it's, business as usual.
So who are they trying to, I guess, sweet talk? Is it the Goldmans? Is it like JP Morgan? Or do they need to also try and find an agreement, for example?
So we got another potential. So we got CHR. That's the ticker.
Targeting these sort of domestic UK lenders. And in fact, they might be made sort of exempt from these requirements.
They could be the smaller ones, right?
C1.
Yeah, exactly. So it sounds like they're targeting people without big restricted trade, and anything with a big investment bank would not be affected by these changes.
Got another one here, potential.
JP Morgan, Goldman Sachs won't be impacted. We do talk to the Treasury, and they say this is still under debate. Nothing's been decided, so perhaps that changes. But right now, I'd say a Goldman and a JP Morgan, nothing changes for them.
And again, this is, so I don't know whether they need to be more friendly to the City of London because of Brexit, so that because people had to leave. Ring fencing wasn't really started because it wasn't an EU rule. So does it again?
So it's at this resistance level, but if we can get a break, we will be pushing up very, very, very nicely on this one. Relatively low volume still, so we do want to see a pickup in volume, but we could be looking at potentially all the way to that 200.
Change the sort of debate or the structure of the city really in any great way.
Very quickly, the call-in. So
yes.
This was basically, I love the call-ins. This was giving ministers power to overrule regulators, but they scrapped that.
So we're going to look at what's happening in Bitcoin.
So
if we're
they
going to
backed
see
away from that, which was a pretty explosive thing. Drew a lot of attention in the city, worried the Bank of England, we understand. And they've kind of rolled that back and said, you know what, we will put that on pause.
All right, Tom, thank you so much. Tom Metcalf there from our finance team. Now, for more on regulation, as Tom was saying, don't forget our UK and London Focus podcast, In the City. Episodes are out every Thursday on your favorite podcasting service. And this week, we're joined by City Editor Catherine Griffiths and the new Lord Mayor of London, Nicholas Lyons. So don't miss that. We discussed Big Bang, ring fencing, and bonuses. Well, that's it for Bloomberg UK.
Let's see if we can get some
continues, of course, in the next hour with Matt Miller, Katie Lyons in New York, or Anna Edwards from London, and this is Bloomberg.
We haven't got too much to go off. I still quite like ZIL as a trade. So look at CHR again. I think we're gonna go for ZIL. See if it's setting up some nice structure there. So a nice bit of volume. Right, let's see if we can get in on here.
is likely that restoring price stability will require holding policy at a restrictive level for some time.
China risk is something to take seriously. The pressure is unrelenting, and it certainly hasn't gotten any better. If anything, it's gotten worse.
Look, I've had a bad month. There's going to be a time and a place for me to sort of think about myself and my own future, but I don't think this is it.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kayleigh Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Stocks rally after Jerome Powell signals the Fed may slow down the pace of tightening as soon as this month. Still, Powell indicates more rate hikes are needed to fight inflation. Soaring mortgage rates take their toll in the UK. Home prices are now falling faster than expected. And disgraced FTX founder Sam Bankman-Fried makes his first public appearance since the crypto exchange collapse. But he doesn't answer the question of where those missing billions have gone. Welcome to Bloomberg Surveillance, everybody. This is the early edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lines in New York. And Kayleigh, Powell said something suitably dovish enough, it seems, for those who wanted to find it, who were seeking it, in his comments yesterday.
Yeah, whether or not it really was dovish, Anna, that is definitely how the equity markets and the bond market took it. And you saw follow through from that in the Asian session overnight. Remember, we are coming off the best month, the month of November, for Asian equities going all 1998. We're talking 24 years. And then they started a new month, December, on a positive note as well. The MSCI Asia Pacific Index as a whole up about 1.7%, with Chinese stocks up about 1% as well. Now, part of that is related to China-specific news. The country's top official in charge of the fight against COVID-19 saying they are entering a new phase in combating the virus. So really just reinforces optimism about the reopening of that economy and the softening of curves. But the other overarching story is that Federal Reserve and the dovish-ish commentary coming out of Powell, at least saying that they will be slowing the pace of hikes. So that is leading the dollar to be weaker against pretty much everything in Asia and G10 today. And Asia is actually the South Korean won that is leading those gains.
Guys, we're going to go for Zelle.
Against the dollar by about 1.4%, just shy of 1,300. That is the strongest one, going all the way back to August. And then in the bond market, after the big rally we saw in treasuries, some follow through from that in Australia and New Zealand overnight. In New Zealand, the 2-year yield down about 7 basis points to 4.55, Matt.
All right, take a look at what's going on here to kick off the month. S&P futures are absolutely unchanged, which is puzzling considering we have such movement in a couple of other asset classes. The 10-year yield right now at 361, so a really relatively low levels, coming up a little bit in yield, but it had fallen by so much. And the Bloomberg Dollar Index continues to fall further at 1264. So these two things should really be a tailwind for S&P futures, for stocks kicking off the month, although maybe traders are looking at November and saying, hey, it was a great month in November following another great month. So we've had a couple of big positive months. Maybe we need to give up some of those gains. In any case, Bitcoin climbing back up over $17,000. Really interesting after everything that we heard from Sam Bankman-Fried yesterday. Maybe investors didn't think there were too many takeaways that would indicate more shoes need to drop beyond the Genesis and Gemini pair that we're already watching right now. But I think it's very interesting to see the continued strength in this cryptocurrency.
Here we go.
Anna, what do you see in Europe?
Yeah, here in Europe then, Matt, we're actually off our earlier highs. We were substantially higher than this earlier on in the session. The DAX still clinging to those, up by 4 cents and 1%. The FTSE and the CAC, they dropped. The NASDAQ up by more than 4% by the close. But also, as Kayleigh was referencing, some of the at-the-margin reopening moves that we keep hearing about from China, all of that day by day having a bit of a positive influence on risk assets. This is the property sector for European equity markets, and we are seeing some of those risk-sensitive sectors doing particularly well. So property stocks up by 2.5% today. I've got a banking focus for you as well. Credit Suisse I put in just because it's such a heavy weight on the stock 600 and a weight downwards, down by 5.2% in today's session. And if it continues to lose ground today, that'll be 13 consecutive days in negative territory, which will be a record losing streak for the bank that has a number of issues, and we know all about those, of course. HSBC down by 0.9%. The CEO of the company has been, in fact, we've seen some disappointing manufacturing PMI data, just underscoring the retrenchment that we've seen in the European economy, certainly the French data and the German data earlier on.
All right. Of course, we're going to keep our eye on French business as the French president comes to visit President Biden in Washington today.
Progress in tightening policy, it is
likely that restoring price stability.
Right, okay, beautiful. So that's the trade for today. Obviously, continuing with the Bitcoin trade, you're expecting it to push up higher. You can potentially add some more margin if it does come down here for its next move, its next impulse leg up. But yeah, so you've got ZIL long and you've got Bitcoin long. And if you are just getting involved now, add a little bit of margin here, and then potentially add a second bit of margin down if it comes to this level of support. But yeah, we'll see how things kind of play out. ZIL's looking pretty good if we do get a nice push up, so we'll see how things kind of develop. On this one,
the dollar has weakened significantly, and equity markets have rallied, but yet Powell didn't talk this back.
Just need a bit of momentum to really start pushing it.
During the summertime,
If not,
during July and August, he was very keen to always talk back any loosening of financial
At the
conditions.
moment, we're
And he
holding
notably did not do
holding
that
a nice
yesterday,
level
and
here on
that's why
ZIL.
the equity market took that in stride.
So
Now,
a
it's
little
not
bit
just
of a
the
pop
equity
up on
market
volume
that's
on the
pushing
lower time
trend
frame.
lines,
So
but it's also the
let's see if we
dollar.
can get
They're both
continuation,
concurrently
bit of
testing their 200-day
momentum to
moving
the
average.
upside.
It just goes
We
to show
just need
that this has
Bitcoin
been
to
a huge
follow
reversal
through
in November of
with
these
us.
key macro themes
But as
from
you can
this
see, we
year.
are holding up
Stocks have
relatively
really
nicely
bounced the
here.
last 2 months. The dollar has fallen
If we can
significantly.
break through
One of the
this
steepest
high,
monthly drops we've seen in 12
we'll
years.
get a nice
And
leg
look,
up,
now that we know that the
pushing
Fed
up.
is
So we
likely
just
to
want
go
to see it
50 in
break through
December, we're
one.
into year end, given that uncertainty is now off the table. Okay, Valerie, yeah, maybe it was all about FCON. Maybe that was enough for the stock bulls. Valerie Teitel with the latest on what Powell said and how the markets received his message. Let's get back to the European economy and specifically the UK. The housing market here has
we're letting this one run. We will come back online and touch base with you all
some of the latest data, some
closer
of
to New York Open. So
yes,
give us a couple of hours and then we'll come back and touch base, see where our trades have left off.
We heard from
We will
Nationwide
update
this
on
morning.
the
It said
group.
that house prices have fallen the most in November since the start of
We'll
the
let this one
pandemic.
run
And
and
if you
see how
ignore
things kind of
COVID,
play out.
it's the biggest drop in growth since
But yeah,
the
cheers guys for
financial
joining
crisis.
us
We've also
this
had data
morning.
recently from the Bank
Like I
of
said,
England
we
this
will
week.
come
In
back
fact,
on
mortgage approvals have fallen to their
in a
lowest
couple of hours.
since the start of the pandemic.
We're
And
just
Zoopla, the
we
property
can't
portal,
leave
says
the
that the
stream
gap between
running
agreed and
unless
asking prices
we're
is its
actively
widest since
talking on
January
it.
2021.
So
So what's happening here?
those
We've
are
got
the
the
rules.
perfect storm because we've got rapidly
But yeah,
rising
thank you
mortgage
for joining
rates,
us, and we'll touch
especially
base with
after
you
Liz Truss's
in a
mini
couple of hours.
budget.
Cheers.